Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 27th of July 2019 and we'll provide our gold and silver weekly update for the week ending the 26th of July. We shall also be commenting on the ECB decision not to raise rates and our forecast for the Fed's decision on the 31st. Gold fell $7 last week from $1,425 to $1,418, having hit a high of $1,433 and a low of $1,411. In sterling terms, gold finished the week at £1,145. That's up £6. And in euros, it closed at €1,274. That's up €4. Silver rose 19 cents, from $16.20 to $16.39, having hit a high of $16.63 and a low of $16.19. In sterling terms, it closed at £13.23. That's up 28 pence. And in euros, it closed at €14.72. That's up €0.28. The gold to silver ratio fell slightly from 87 to 1 to 86.5 to 1. The Dow Jones closed on Friday at 27,192, up 51 points on the day and up 38 points on the week. And the Nasdaq closed at 8,330, up 91 points on the day and up 184 points on the week. And the S&P 500 closed at 3,025. Up 22 points on the day and up 49 points on the week. Brent crude rose 99 cents from $62.47 to $63.46. And US light crude rose 57 cents from $55.63 to $56.20. The dollar index stands at 98.01. That's up 0.86 on the week. We ended last week's commentary concerning our forecast for gold and silver as follows, quote, "Our inclination, though, is still some firming of prices until both rate decisions are out of the way," unquote. And with the exception of a slight dip in the gold price in US dollar terms, we were pretty much on forecast, though we did admit that there were so many variables at play it was difficult to make an accurate forecast. However, the pumpers had no doubts in predicting enormously higher prices as the new bull run was not only in place, but is about to go to the moon, as they claim that the dollar is on the verge of collapse. It's interesting, though, that the dollar has just happened to hit a new time high for the year on the back of stronger than expected GDP data announced on Friday. A rise, in fact, of 2.1% against estimates of 2%. Now, we have to admit, from the first quarter, it's down. The first quarter being 3.1%, and is the weakest increase since President Trump took office. But despite this falling growth, it is still remaining quite positive, especially when compared with that of many other countries, especially Europe. And it indicates that a US recession, as it's technically calculated, is still some way off. And this certainly strengthened the dollar to its current level. It's also a mixed blessing for stock markets, especially as they're hoping the Fed would be cutting rates on the 31st of July by as much as 0.5%, whereas in reality it's likely to be 0.25%. And we have stated all along, if we were running the Fed, we would not be cutting rates at all. Well, as a result, gold vacillated last week and weakened on Friday. But in fairness, within quite a tight range of just $21 or 1.5% for the week. From a technical analysis point of view, whilst the main trend is still up, the momentum is lower. And we may very well see gold operate short term within a range of between $13.96 and $14.67. But as mentioned earlier, it's all eyes on the Fed. To some extent, the dollar is also buoyed by the fact that although the ECB did not cut rates on Thursday, and please see our video entitled ECB Leaves Rates Unchanged but Lower Rates Are Ahead, and the details and link is provided in the description below, we know from President Mario Draghi's comments that lower rates are ahead in Europe, together with packages of QE or quantitative easing, as yet to be announced. We suspect September may indeed see a rate cut into negative territory, as current ECB rates are resting at 0%. Now, silver painted a slightly different picture last week. Whilst again suffering oscillations, was generally behaving in a more bullish fashion, moving within a band of some 44 cents or 2.7%. Technically, there is strong support at the $16 level, and extremely strong support at the $15.50 level, but again, considerable resistance at $17, and we've predicted silver's high for the year to be around $17.50. Again, so much is dependent on interest rates, and as far as silver is concerned, negotiations with China, which are resuming again next week. Speaking of next week, we have the most important data announcements for the month without any doubt. On Tuesday, we have personal income, consumer spending and core inflation for June, plus the Consumer Confidence Index for July. On Wednesday, the all-important FOMC announcement on interest rates and Fed Chair Jerome Powell's press conference. Thursday, the Market Manufacturing PMI, ISM Manufacturing Index, and motor vehicle sales all for July. And on Friday, non-farm payroll report, plus the unemployment rate and average earnings, and consumer sentiment index for July, plus the trade deficit figures for June. All in all, a potential cacophony of data, which will prove a delight to analysts who thrive and enjoy analytical interpretation. For the rest of us, hopefully a clear insight as to how the American economy is heading, and we suspect that whilst a 0.25% rate cut is almost a given, the Fed chair is likely to suggest that the Fed will intervene when necessary with monetary easing, but perhaps suggesting that time is not quite upon us yet. The Fed knows that any sharper than expected cuts will lead to its European partners being even more aggressive, and therefore negate the benefit of such a move. One thing we can all be confident of is that we are now facing an environment of lower interest rates, which should prove positive for gold and silver, but we have to bear in mind that the reason for those lower rates will be falling global demand, and therefore lower silver usage for industrial purposes. However, if we find that trade is not as adversely affected as many fear, and that a deal with China can be achieved, then silver demand for industrial purposes may indeed not be so adversely affected, and especially if governments around the world increase public spending on infrastructure, as a number have indicated that they will do. We also have to remember, of course, that stock markets love low interest rate environments, except, as we stated last week, the banking sector, of course. And this is an alternative location for investors to place their capital. So next week we should see some movement, in fact, in gold and silver prices. Movement because of an anticipation of the Fed's announcement on Monday and Tuesday, the actual announcement on Wednesday, and then the publication of payroll data on Friday. We suspect that most of the activity will occur post the announcement. The dollar index is already quite high, and depending on what the Fed does and what Jerome Powell says will affect that index. If we only see a 0.25% cut and a let's wait and see commentary, we could see the dollar strengthen further. If, however, we have a 0.5% cut and or a very dovish Fed commentary, then the dollar index will fall and gold and silver prices become the beneficiary. Our view is that a path between the two will occur. A 0.25% cut plus a wait and see but willing to help the economy when needed statement given. And perhaps a side reference to future cuts ahead. It's important for the Fed and Jerome Powell's own future to keep the stock market rising, the wheels of commerce turning, and the warm glow of support from a president whose catchphrase is, "You're fired." Finally, to all In Sanctum members, our branded merchandise is now on the website at illuminatisilver.com, and you receive discounts if you're a bronze or silver member. We have also started downloading a host of ebooks and courses and videos which you can download to your own PCs completely free of charge. And if you haven't already done so, please sign up to our Discord channel. All that remains is to wish each of you a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.